Welcome to the Trader's Crib. We are live this morning, Friday, April 19th, and we are here to do a bit of an introduction for those of you who may be interested in trading or interested in what is this Trader's Crib, right? What is this all female day trading community? What is this, right? And so if you're here for that, I am here to tell you, okay? So this morning, I would like to first and foremost introduce myself and kind of give you guys a rundown of what's going to take place this morning. All right. So first and foremost, like I said, this is our free live day trading webinar of the month. We host one once a month to try to encourage other women to trade, at least start on the side. It's not that bad. I know it has a bit of a risk to it, but it actually is very lucrative and has a very, what do I say, Zen lifestyle that you can add to your life, right? It really can be. Trust me on that. All right, so we're going to start out this morning with an introduction. I have a little presentation for you guys, and we'll get into market analysis because we have a lot of market analysis to do for my experienced traders here with me this morning. Then from there, we will start our live day trading session. We will go into the charts. I will show you how I set up my chart to look for the next best trade. And then we will attempt to trade. If I have a trade there, I'll do it with you guys. And we'll have a discussion and things like that. We'll look at any other stock tickers, futures, or forex pairs in the house. You'll let you guys get in on the discussion and interaction and kind of let me know what you guys may want to look at while also introducing a bit of yourself, right? And why you're here. And then we'll wrap up with any questions that you guys have. So please take your time today. I have all the time in the world this morning to ensure that I give a thorough introduction to the Trader's Crib. So again, welcome, welcome, welcome everyone this morning. Good morning. All right. First and foremost, who am I? If you do not know me, my name is Randy Michelle. I am a clinical professional gone rogue. Who else in here used to work for healthcare, right? Okay. And I did, and I loved it, and I loved research, a research nerd, right? I've been in research for over 10 years, but I have been trading and investing over 5 years of experience, and I've been a full-time day trader for the past 2 years, living the life, raising my daughter, being a vegan, dancing when I feel like it, planting herbs in my garden because I love to cook with fresh herbs, doing my astrologer nerd out research, love to kick back and watch old Disney 90s classics with my daughter, and just overall true Black girl magic science nerd, right? I call myself a nerd all day. Fun facts about me, I am scuba certified, right? How many of us that look like this actually will put on a tank, snorkel goggles, and fins and dive over 50 feet underneath the water? Me. I've done it. All right. And then, of course, for all my veterans in the house today, whoop, whoop, United States Air Force veteran. Yes, I am. It was short-lived experience for me, but either way, I get my discounts on Veterans Day. Leave me be. Okay. Just leave me be. For y'all veterans, y'all get it. I ain't got to say anything else. All right. All right. Just a little bit overview of my life, my past experience, my crazy daughter, my scuba diving. I was telling the truth for those of you, again, who are in the military, those gas mask inserts in that gas mask chamber, y'all know it. It's an experience. And there's a family out kayaking because we live here in beautiful, sunny Florida. So we get to kayak with gators and manatees and turtles and do all types of fun stuff while also relaxing at the beach, right? This is why I live here. This is why I live here. So What is the Trader's Crib? Why are you guys here potentially interested? What is it? Like, I don't know. All right. The Trader's Crib is a day trading community that focuses on empowering women in the field of day trading, right? I've worked in enough male dominated areas. I told you guys I was clinical professional and I was in the military. And now I work in finance, all male dominated. I'm tired, man. I need like some female love in the house, right? Okay. Get us. All right. And so this is why this is born, because trading also could be a very lonely experience. So the Trader's Crib also offers a fundamental trading course to help those who are beginners learn the basics and the fundamentals while also offering a live day trading community exclusively for women by women. We trade in the mornings and all of our community live trades are recorded. So therefore, if you are a member and you do miss our calls, you can always get the action later. All right. The purpose of this community provides support, nurturing space where females can advance their skills in trading stocks, options, and futures. All right. Why all female? Because we're can support each other here. We can say things like, oh my God, my menstrual cramps made me mess up my trade. Like, I need to be able to say that. Okay. I need to be able to be like, oh my God, my daughter, oh my God, like just all the things that us girls do. I need to be able to get that out because it affects my trading. Why? Because I'm female and I have all these other hats that I wear in my life, right? And my life is fluid. And I can't just compartmentalize every little thing. So when it comes to trading, because it can be, it has risk involved and things like that, to help manage that, help manage your mindset, help network and vibe with other women. This is why the Traders Crib is here, and it's for all women because we just vibe differently. The stuff that gets to us just doesn't get to men the same way. And that's just the way it is. All right. The core features of the course and community, if you join the Trader's Crib and subscribe, right? You'll have educational resources, not just for trading, but for mindset as well. Holiness, spirituality. That's what we do up at here. Okay. All about the mindset. If you guys were here at the beginning of my call, you were vibing to very zenful brainwave mindset music, right? Because we want to calm our emotions before tackling this market. All right. The market is emotional in itself. The market's emotional in itself. So we need to have calm emotions when trying to trade the emotions of the people. All right. So diverse perspectives here in the club, in the crib, excuse me, in the club, right? In the crib. A lot of the ladies, we share our different perspectives, how we read the charts. We sprinkle a little bit of how we see each other's strategies into our own strategies. It's really a social trading environment here. All right. We stream live throughout the week. All right. We follow a schedule. That schedule is posted for you guys to see throughout the month. So you get lots of opportunities to communicate and connect with us and trade with us, right? We focus on trading education. So we want to like focus on the comfort of your overall trading, not really making the profits and like being big 300 plus returns. Okay, that happens to a lot of us, but we don't focus on getting that return. We focus on just comfortably trading consistently, right? That's what makes us profitable traders. All right. And of course, we have a course that gives you stocks, options, and futures trading education. Okay. Because that's what I do here. I trade it all. I even trade a little Forex. I did mention that at the beginning of the call, right? But my course is not deep into breaking down all of the Forex pips and things like that. Of course, you could ask me questions. You get in the crib. I know all about it and we talk about it. But the course is primarily stocks, options, and futures trading. Okay. All right. For those of you who are new to trading, just going to give a little bit of background so you can kind of understand what I'm talking about before we get into the charts. All right. First and foremost, what is a candlestick? You look at a chart and you're like, what is all these lines, bars? What the heezy am I looking at? Especially when y'all about to look at my chart, because I have customized it for my fabulous self. Okay. Because I told y'all, science nerd. So here we are. The candlesticks, what they do is they represent price action. They're a way of displaying information about the asset's overall price movement. I use the word asset because it applies to stocks, options, futures, forex, bonds, whatever you're trading. Okay, there's a candlestick involved. The body of the candlestick represents the open to close range. The wick indicates the high, the extreme high and the extreme low of that intraday movement. And then the color reveals the direction of the market movement in that duration that the candle was being made. All right. These candles are important to us. Why? Because they create what we like to call support and resistance. What is support and resistance? Well, support and resistance is based on supply and demand. When demand is greater than supply, price rises. And when supply is greater than demand, price falls. Sometimes price will move sideways when supply and demand are in equilibrium, right? Kind of like a steady sideways motion. You guys, this is all the technical terms. As I get to the charts, you will hear my crazy analogies of how I break this down to where you can understand it. And this is how I lay out my course, right? I like it really, really simple. I am a mother of a young child. You got to keep it simple. All right. This support and resistance can be used as entries and exits and stop losses, depending on how you choose to trade, but they can help you make your money. That's what we use them for. That is the key. The key of trading is support and resistance identifying. This is the screenshot of what support and resistance looks at the chart. That red line at the top is the resistance. The green line at the bottom is the support. Resistance, like the ceiling. Price came up, hit the ceiling, boom, hit his head. Ow, that hurts, right? And it came back down, hit the floor. Oh my goodness, it's like bouncing a ball. All right. You bounce it hard enough on the floor, it can hit the ceiling, it bounces off the ceiling hard enough, it spikes to the floor fast, right? But then you have sometimes slow little bounces and dribbles. That's the sideways movement, right? We could break this down into basketball terms. Who likes basketball? I like basketball. I have no problem with that. I think we can all get jiggy with that. All right. These candlesticks form patterns. So as they bounce up and down in support and resistance, they also form what we call candlestick patterns in between. All right. The individual candlesticks form patterns when put together over time. Traders can use these patterns to identify major support and resistance levels, identify reversals and continuation in price action, and set entry and exit stop losses to manage trades. All right. A tip: the larger the time frame, the stronger the candlestick pattern. Remember this. I am like wooing you in to the secrets of the candlestick magic. The larger the time frame, the stronger the candlestick pattern. Meaning that patterns formed on the 4-hour, the daily, the weekly time frame, when we get to the charts, have a higher probability of working out in your favor, or say the continuation of whatever you're seeing, the trend, in comparison to smaller time frames, such as 5 minute, 2 minute, 1 minute. I don't go down that low. I'll get into why when we get into the charts. Here are a few candlestick patterns to introduce those who are beginning to start to learn and familiarize themselves with. You have bullish patterns, all right, where price is increasing, tweezer bottoms, morning stars, double bottoms or W's, right? Or cradles. These are all patterns that price is coming up, coming up, coming up, coming up. Price coming down type patterns, we have tweezer tops, and you have tweezer bottom, we have tweezer tops. Hit the top twice and came down. Hit the bottom twice and came up. Evening star. Don't ask me where I got these names from. It's called Japanese candlesticks. Ask the Japanese. Konnichiwa. All right. Double tops. All right. And then bearish cradles coming down. So the double tops or M's. All right. And these are just a few to introduce you to them. Again, if you take my course, you will get all of them and then some. Okay. All of them and then some. I love the candlesticks. We use these candlestick patterns to identify fair value gaps and order blocks. So everything is coming together. You get one candlestick comes together for candlestick patterns. These candlestick patterns create support and resistance, as well as fair value gaps and order blocks. What is a fair value gap? Well, it occurs when there's inefficiencies or imbalances in the market, like when there's too much supply or too much demand, like at an impulsive rate, right? It's like too much of one thing. When you get too much of one thing, it's not really a good thing. So we got to equal that out. And I'll explain how we do that in charts. And then we have an order block. An order block is when you get a consolidation of candles usually. It kind of is like a little signal of when large institutions, right, are ready to buy in or sell. They'll kind of create order blocks on the chart. And these order blocks can be indicators of where price may break out to next or where price is coming to next. Where price may break out next or where price is coming to next. Remember these words. For those of y'all know me, y'all know I'm crazy. Okay. But in a fun way. All right. In a fun way. So this is the basis of trading. Okay. The fair value, the order blocks here, they're consolidations, like I said, into the side, and they break you up or down, and they usually run into another order block. And then you have a fair value gap, which is usually created by three candles. Kind of can't see this here with this big pointer here, but it's like three candles, right? And these three candles, the middle candle, if you pay attention to the middle candle, the space between the wicks of the candle on the first candle, excuse me, and then the last candle, that space that's formed of on the middle candle, that's from the first candle and the last candle. I'm getting tongue-tied this morning. Y'all bear with me, all right? Is the fair value gap. I'll show you guys them again on the chart. They pop up everywhere, all right? And these fair value gaps will be up or down, and they're the imbalances at that imbalance of price action, right? It needs to be rectified. So what we're going to do from here is we are going to put all of that together and start trading and get into our market analysis, because I want to look at the charts before the bell rings. For my day traders out here who are like, Randy, yeah, bell ring in 10 minutes. Yeah, I know. I feel y'all. So let's get it. I feel y'all. I feel y'all. I feel y'all. And then we can ask more questions and you can be like, well, Randy, let me just kind of get into the market analysis and let's recap. And then you can ask me, okay, go back to that slide again and let's put it all together. All right, let's do it that way. And I'm looking out for the chat for any questions that you guys have. Of course, for those of you guys in here with me today, you can raise your hand and jump on mic and with me. I don't mind taking those questions that way either. So let me close this here. And here we are. All right, so everybody should be able to see a trading view chart. So for those of you who may have had particular questions about how I trade, it'll probably be answered as we go through this call. All right. So this is a blank ES chart, ES meaning the futures, S&P 500 mini. And I will bring it all together with you guys, what I just spoke about. Candlesticks, the candlestick patterns and fair value gaps. Hold on for the ride. We're going to go through this quickly. So for my experienced traders, before we do that, where's my news at? News, 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 news. Two things we always do, get our mindsets together and get news. And so for mindset, I'm not going to ignore that either. We start every call with mindset meditation, like a quote. All right. And then we go into market analysis from fundamentals, some news articles of what's happening. And then we look at the chart. All right. That is the flow every single day that we meet. All right. So our mindset this morning, okay, because I jumped into a presentation because it's the free live. I don't want to welcome everybody. And now that you guys are all here warmed up and know what we're doing, welcome, welcome, welcome. And so this morning I decided to pull a card, motivation, mindset cards. Oneness and unity is what I pulled. Oneness and unity. And it says, I accept the oneness of all life, and I know I am one with all others on this journey. I support them and let them support me. I am brave and not afraid to ask for assistance. I'll allow myself to empathize and sympathize with others. I choose to see the love in all around me. I see everything as part of my own life and I accept others for who they are. I find common ground with others rather than differences, as this brings harmony into my life and into theirs. All right, oneness and unity. Remember that for yourselves. Remember it's assistance for your trading. All of this taps into your tradings. This is why I always lead with mindset, because mindset is the biggest thing. Fundamentals are easy. Trading candlesticks, learning all of that is like the strategy is 10%. Okay. 90% of this game is mental. All right. Let's get into the fundamentals. So this week we had a pretty slow week looking at Forex Factory. Forex Factory is my source to figure out kind of what's happening in the news. Today, April 19th, we don't have any red folders from the United States. What Forex Factory is, it's a resource that kind of gives you the events that are taking place around the world for different that influence that currency or that particular market. I filter mine out right here. You can filter. I filter mine out for just the United States. Of course, if you're trading currency pairs and depending on the currency pairs that you're trading, you are going to want to add like JPY, the British pound, the euro, it's Japanese yen, excuse me, the euro, the New Zealand dollar, the Swiss franc, the Aussie dollar, Australian dollar, and all of that. So you may want to add those. But for us here in the Traders Crib, we focus here. Friday, we have nothing. We always view into what's happening next week at the end of the week, because we want to ensure that we're aware of what's taking place next and how the chart may be setting up for next week's moves. Okay, Monday we have nothing, but I like to pay attention to these red folders. So looking at Tuesday, not Wednesday, Thursday, and Friday, we have red folders, right? And based on all of this economic data, advanced GDP, unemployment claims, core PCE, all of these things, the change in price and goods and things like that, all of these things will help influence the market either up or down, right? And this is all leading towards our big day of the Feds announcing what they will do next on the interest rates. Now, for those of you who are in the markets like we are, daily, you are aware of what this decision may already be, which is means most likely nothing. We'll pause and kind of wait. So we'll just see how this turns out. I'm excited because we've been dropping like it's hot in this market lately. It's been quite a wild ride, and I'm excited to see how all this data is going to continue to play out. Looking at CNBC this morning, these are a few headlines that I just like to go over and peep into. I don't focus too much on every little thing that they're saying. I like to get an overall idea because their headlines influence others' mindsets, which can influence the market. So we first start with our pre-market banner that shows us that the Dow futures was up a little bit. The S&P and then the NASDAQ are all down. They actually probably could be down a bit more if price didn't run all the way down last night and run back up with a vengeance this morning. That was a fun roller coaster I'll show it to you on the chart. And so S&P futures recover from overnight losses and are little change following Israel strikes. And that's the thing, when we have things happen overseas as far as the war or between, Israel and things like that over this oil, it is becoming, things like what happened last night for those of you who watched it, because I definitely watched it and I was just like, this is crazy. The market took a crazy plummet. So this is what's in the headlines, right? This morning, Israel carries out limited strike against Iran, NBC News source says. All right, we just pay attention to these to give us a heads up of why the market did what it did. All right, and we shouldn't be too surprised. All right, other headlines, Procter & Gamble sales disappoint as price hikes slow down. And then Trump media alerts. I'm over the Trump media alerts, blah, 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 blah. But all right. Benzinga is my other news source that I like to look into in the morning. Let me refresh it because it likes to update pretty quickly. So Wall Street on track for 6 day of losses. Netflix geopolitical tensions drag futures down. Analyst tells why next 2 weeks are pivotal. I agree. Next 2 weeks are very pivotal. It's the end of the month. beginning of a new month, we have the FMOC press conference May 1st. We have ADP non-farm change May 3rd. There's a lot of hotness going on all at once. And so we're going to see if we can stay ahead of the volatility price action where things are going and moving. So from there, if anybody has any news that they want to bring up, talk about, this is when we would normally do it, right before transitioning into the charts, right? Okay, because we take that news and we're like, all right, we know the futures ran down. That's what this wick down is about. This is what happened last night because the futures for today will start 6 p.m. the night before. The futures for today's candle started 6 p.m. the night before. All right, and it's heavily influenced by worldly news. Okay, worldly news. The So when the London market goes on, China market, things like that, futures can move. And of course, war anywhere kind of triggers everybody's markets a little bit. All right, so we'll start with the top and look at how we're doing for the week. We could see that this whole weekly candle, right? This is what I was talking about, time frames, right? This one candle represents this week. And this week we have been trending downward the entire week. It's just one big red candle coming down. My blue candles are going up. Like I told you, I have I fancified my chart. Shout out to Fanciful Nails in Dallas, Texas. Okay. So we fancify things over here. And my candles are going blue, going up because blue is my favorite color. And that red is not really a red, it's a pink because my daughter loves pink. Okay. So that's just me. The bell has rung, but we're gonna go through this because there's always a trade, and we do not practice FOMO in this market. Okay, in this crib, I would say, in this space. So what we're doing here is, as we were falling down, we came for these fair value gaps. Remember, I told you these imbalances in the market. What price likes to do is price likes to use these fair value gaps, as I would like to call them, as magnets. They're magnets on the chart, right? And what happens to a magnet? Things get pulled towards magnets. So fair value gaps and order blocks, consolidation, like you see here on my chart, this is consolidation. Both of these are magnets pulling price action downward, right? And and how did I know price was going to come back down here towards these magnets? For one, they're the fair value gaps. You can chart them on your own if you use TradingView, right? There is a little indicator tool that helps you like just pop them on the chart, okay? I do not use a lot of indicators. I actually really don't use anything more than this fair value gap indicator just to save me some lines. And then my own charting lines because of the candlesticks that I'm reading. I do not use RSI and all these whatevers. I don't use it. I literally read the candlesticks. And this is what I'm going to teach you right now. In this fair value gap, you see this wick of this candle that is left within this fair value gap. Do we see this small little wick from back here in January? Because as I put my mouse over the candlestick, the date appears at the very bottom. For those of you who are new, you know where to look on my screen. So this is Monday 29th, January 29th. This is a weekly candle. Okay. So this is that beginning of the week. Okay. And this week, that weekly candle dipped into this fair value gap. What I have noticed is price likes to come back for wicks left in fair value gaps. All right. Price likes to come back for wicks left in fair value gaps. Where are my moms at in the house, right? We got tons of moms out here, right? So how many times you drop your kids off to daycare and you had to pick them up, right? So if you drop kids, the candlestick wick, off into the daycare, the fair value gap, then you got to pick them little crumb snatchers up at some point. We got to go pick up the kids. You can't leave them there, right? I mean, unless you just, we have some parents out there that do some stuff. We're just going to leave them alone. But right now, we're going to come pick up our kids. Okay. We're going to come pick up our kids. And this is a weekly time frame, right? So what I like to do to set up my charts is I just put lines where that indicator is. Oh, price come back. I found a magnet. I found an indicator that price may come back towards this magnet. I'm going to take some horizontal lines. And this is again where I get fanciful. All right. And I get color coded with green as my support, right? And red as my resistance and purple for my gaps and da 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 da. Da. So I'll come in here and I'll do that. I will also label. The beautiful thing about charting, you can label these lines. Okay. You can label them. You want to get in the habit of doing that. So for me, I just label this weekly fair value gap open. I'll just leave that there. Why? Because I always come down to a smaller time frame. And as I come down to that smaller time frame, like the daily, to see how my candlesticks are moving for the daily, because I'm a day trader. So I'm usually looking for smaller moves. And on the futures, I'm usually looking for no more than like $20 and get my money and get out of Dodge. And so when I come to a smaller time frame, I want to remember that I got this line from the weekly candlestick pattern, the weekly candlestick pattern formation. Because when I come down to the daily, now it looks similarly different. It is still within a fair value gap, but this daily fair value gap actually extends all the way down here, right? So this daily one is a little longer. So again, I get fanciful, right? Okay. And this is a beautiful thing about the Traders Crib and networking, y'all. I'm saying fanciful for a reason. I'm telling y'all in the Texas area, fanciful nails, fanciful hair and nails, get it all done. Fanciful. Look them up. Telling you. Drop the link. drop the link. You know, if she listening, drop the link. So so there we go. Coming down here, I like to do dashed lines for my daily. I do solid lines for my weekly. And then I do the little dotted line down here for my 15-minute, 2 hour. Like I really have a system to my charting. Okay. I have a system to my charting. So as I'm going through the different time frames, I know what I'm looking at. All right. So to not spend a crazy amount of time charting this whole thing up, okay? Because price is moving, and you guys would like to make some money today. I would hope, especially if some of you are already experienced and you're in here trying to figure out what Randy do. I'm going to switch over to my completed one. So this is the ES June chart in which June contract, we're trading the June contract right now. And that is important because the futures contracts do expire quarterly. So the chart will change. And then on TradingView, you can look at a continuous chart, meaning that you can look at all the contracts combined over time in one seamless chart. Okay. And so this is where the ES, if you look over to my watch list to the right, where I have ESM, the June contract, where I'm only focused on the June contract data. And then the ES1 exclamation point is the continuous of all of ES since like years back combined. Okay. So this is the one that I have all charted out. As you can see, I have all my lines, right? But I have all my lines and they're all labeled, right? Except for this one down here, which is a gap close. I'll label it for you guys so I won't confuse you. It's a physical gap close, so it's a daily gap close. So as you guys see, I chart, this is the daily. I'm on the daily chart. So we're looking at daily candles, right? And you guys can see I went in here where price action is, and I found 15-minute fair value gaps, open and closing, because these are those imbalances again within the market that I'm using to trade either up quickly because it's going to rectify that imbalance by coming back up and revisiting it, or getting kids out of the fair value gap daycare, right? Right. So when I labeled this one down here, I said weekly fair value gap open with the kids in it, because that's just my thing to let me know, okay, price can really come back down further potentially. And I just need to watch news and watch world events that are going to take place. It's really interesting. The world news takes place in alignment with the chart setup to come down to get the liquidity that it needs to get. These imbalances are essentially liquidity. Write that word down, liquidity. Okay. So here we are for the daily perspective, right? And so let's review from our traders what has taken place based off of my lines here. So we dropped down with a vengeance last night, essentially coming back into this gap. We had this gap close, and I saw that come down. We had a lot of pressure from the top side that price could do this. It came and closed this first small gap. The gap is what I mean when price, with two candles, when the next candle appears, it leaves an actual space on the chart. This is a gap. All right. Most of the time, gaps for me are filled when price comes back like it did and puts a candle body through the gap, if that makes sense. So we have like a parabola action here for those of you who remember way back in high school math what a parabola is. All right, so in this parabola action, all right, because this is a graph, you have this, the candlestick came back and came all the way through the gap. All right. Usually the futures likes to do that. Each ticker is in its own right how it likes to come back and fill gaps. It can be a very guaranteed way to trade. I want to say guaranteed, but it can be a profitable way to trade. But you have to be careful. You have to study how soon will it come back. This took forever to come back for this gap. All right, like this is a day. Each one of these candles represents a day. So these are days worth. Okay. This is from February to April. Months. Like I tell my traders all the time, it get biblical up in here, 40 days and 40 nights of chop before you get what you want. Like you have to have some patience. Patience pays in this game. All right. So we came down with a vengeance, probably because of war, we took it down. So coming down to the 2 hour, let's see how price is coming back up. So we dropped all the way down. We closed the gap. As you guys can see, shortly after we closed the gap, we started to turn back around. We can come down to a smaller time frame, the 15-minute, and you can see exactly how the candles formed and drew to come back around. All right. We created these patterns that are forming. Remember, I mentioned the cradle. This is like that cradle. Price came down, then cradled, and now it's coming back up. That's the bullish pattern. These patterns come together and form fair value gaps, order blocks, and we look at these patterns to help us pick the direction. So as soon as I see that price gave me the cradle, I will begin to trade this back up because it had fair value gap after fair value gap in here, all this liquidity that it ran back up to retrace back up to where it fell last night anyway. Usually price comes back to where it fell from and likes to retrace. We call it retracements, right? So this is a 15-minute. In this 15-minute candlestick action, we came up, we created another level of support or order block. We also created another fair value gap. Then we broke up from there, created another level of support. The literally chart just does this all day, back and forth. This is just all we do. We just look at fair value gaps, order blocks, fair value gaps, order blocks, and we just trade them up and down. So you get another order block, right? So that also shows you that price is probably going to try to stay up a little bit because it's forming these floors or these bottoms or these support levels, right? So price can't just fall right back down. It's going to hit the floor and bounce back up. That's what you're paying attention to in these consolidated areas. All right. So, so we're running up and we're slowly like bouncing up. We're meeting this order block. And I remember I told you magnets, how price comes to another order block. So if you look at an order block, just say order block, consolidation of candles sideways. So if you take like your rectangle, I like the rectangle little tool because then I square it off. So then it helps your psychology go, okay, it's an actual block. And if I look at it as a block, I look at it as a gap, and I square it off to the top of the wick of it, to the bottom of it, from where price broke down and formed, came down, started to chop up sideways, and then broke out. Where it broke out is where I want to stop my square. Then as price comes back up, remember I told you they're magnets. So price got pulled right back up to the block, to the magnet. So now you're going to say, oh, I saw an order block. Price just fell. When is price coming back up? I need a signal. Oh, there's my cradle, my bullish signal that price come back up. Now I'm going to enter on the candlesticks to take price to take price back up because now I am confirmed through the bullish going up, through the bullish cradle pattern. Price now has told me it wants to come back up and the magnet is now activated. This says magnet activated. I'm going to pull price to me slowly, take profit at the magnet. Take profit at the magnet. Enter, take profit. Enter, take profit. Would have been like $60. $58 move on ES and $58 move for futures. If you're trading the futures as a stock, okay, to trade the futures mini, okay, let me break down some futures fundamentals for you guys right. The futures mini is you need a lot of capital. All right, you need a lot of capital to trade the futures mini like a stock. All right, the leverage on it though is $50 to every $1. So if you caught this move, just like I said, and you came in on the signal down here, and you once your cradle was formed, and then you took profit, say just right here, right where the price originally broke out from, just to meet the magnet, meet it right there, right? You would have like 50 something dollars. You would times that. There's a $50 move on futures. Times that by 50, that's your profit. I know, oh my God, what? I know, just that fast. I know. But here's the thing, patience and practice and the community and support and mindset matters to do that successfully. Okay. Just saying. All right. And studying. All right. To do that successfully. Okay. So that all happened this morning, running back up. You really had to be on it for this one. This is one of those times where like the market just really did something impulsive, and you either there and you saw it and you got it, or you missed it, and it just is one of those things, and you don't cry over FOMO because price just came back to where it was, and there's always another move to be made, right? So that's just a mindset you want to keep. All right. So this is ES coming up like so. From here, because it met the magnet, once it reaches the magnet, a lot of times it likes to make another magnet, and it's going to either break up or down from there. That's all it does. It just meets its match and then figures out, oh, I met my match. Am I going to go up or am I going to go down? I'm going to go up or down. And like you look for the signals by looking at wicks and fair value gaps from either the 2 hour is your strongest play. So let me delete that square out. Your 2 hour is your strongest play. So as I come back out to the 2 hour, I have this labeled up here. I have the 2 hour fair value gap close at 5101, around 5100 area. As you guys can see, there's wicks that were left in here, but multiples. This is one of those sticky situations where, there's always exceptions to the rule. And so as price is going to come back up for this, I'm not surprised it came down the way it did, because when it wicks up multiple times, it can even more so aggressively come down. And then it can potentially, and this is all because I know and I've studied that I literally, y'all know how many hours, I should probably put screen time on how many hours I put in on looking at this chart, like per day, over the past couple of years. That's a lot of hours. All right. So I just know things, and this is what studying does. And so I know price is going to come back up here, and it's going to do it in an interesting way, potentially to come back and take this liquidity, because it didn't finish it. What I really want to point out is it didn't finish it. It left room. It didn't come all the way through this fair value gap. And that's why price needs to come back and collect the damn children. He's like multiple kids in here, right? So we just have to come back. We have to come back and at least test it. All right. Of course, the economy likes to go up and be a bullish market. So of course, the prices are obviously going to come back up as well. So that's a yes for us. Looking at side by side with SPY, because some of us could have held SPY puts yesterday. All right. And you're like, why did I do that? The price came right back where you got in. I know, right? It'd be like that. So this is actually what I'm kind of glad I didn't hold SPY last week. Almost. But Lord, oh man, that was a good move. So I see this rounding up back up. Let's look at SPY on the 2 hour. And SPY has a few gaps left back up here that needs to be addressed. But if we come out to the daily, we recognize first and foremost with SPY. SPY is over here on my right. I have a split screen view because whatever SPY does, the future tends, I mean, whatever the futures does, excuse me, run that backwards, rewind. Okay. Whatever the futures does, the SPY will do because SPY is the S&P ETF, right? 500 ETF. So we're gonna come as we look at the daily, we recognize SPY has a wick down here, but there's still this like gap to be shown here. So, and if we come up, we can only come up so far as we'll hit our head against the fair value gap. Of course, price we're going to get pulled, but we don't have our reversal signal yet that this fair value gap is activated and we want to really be pulled back up there. We don't have that just yet, right? So we want to ensure that we take our time before jumping in if price is really coming back up here with SPY specifically, because we see the candles. We know that it can be pulled, but we want to get it on the right signal so we're not holding our SPY contracts too long. For those of you who understand options trading, we know that options has an additional risk with time decay and theta. All right. So this is SPY and ES today. So right now I'm just kind of chilling with the both of these. So we would have to look for outliers, not 10 o'clock yet. And we know that the 10 o'clock time can have an impulsive move potentially. So let's see what else the market is doing and cooking for today. What tickers are we looking at outside of my norm? You ladies are up for that. So whatever you guys want to drop in the chat, go ahead and drop in the chat. But I'll start with my watch list. All right. So looking, and I'll zoom out because that plummet, and I'll start with the daily on everything because that drop did some damage to some of these other tickers. Okay. So Netflix, case in point. Look at Netflix. Netflix took a drop and opened all the way down here. So now we have a nice good gap to fill at some point. It's obviously not ready now. Because we need again that signal to come as some sort of cradle, W, bullish pattern. We need more candlesticks before price will come back up here. So Netflix to me right now, you know, I just been telling y'all we should just like man with Netflix because it's just like it was just bouncing here. So I was just like nothing until it falls. But this drop right now, we just gotta kind of wait and see what happens. The strike news events like that kind of put us in a pause and wait, see how the market's trying to recover thing. We're in between two gaps here, so that's gonna make it even more interesting because you don't know whether to go up or down. It literally fell, for one, it fell in a gap. I don't know if you guys can see that. There's a small gap right here. It fell right into it. And then it left a gap. And then, of course, it has a gap below. So as it starts to form, you can prepare for either a trade to take price further down if the market's going to give us a downward pull, more of a downward pull, which I think it can. I mean, if you look at it from the weekly, and knowing that we had more downward pull even on the weekly futures, think prices really can really come down on us. CL futures, okay. Really come down on us and continue from there. So CL is a ticker. I hope I'm pronouncing your name right, Ashia. Because I don't like to say people's names wrong. You can correct me. Crude oil futures, is that what you like to look at? I'm just making sure we're on the same page here.
Yes.
All righty, let's do it. This is why I love the cribs. Yeah. Y'all, yeah, as much as I'm teaching y'all can teach me. I love this. I have never looked at this. All right, let's go. So first and foremost, welcome, Ashia. Thank you for this. Can you just shine a little light on what you're looking at, why you look at this one, and then in that, start with like who you are and where you're from and what brought you here today?
Hi, my name is Aisha. I've been trading on and off for just the past year, couple of years, but I haven't been consistent. Um, I'm a nurse, so I'm trying to find out, should I be trading more like overnight or maybe like early morning? I'm still trying to figure out what's the best time frame because I'm always busy.
Mm-hmm.
Far as crude oil, I like how it moves because it's not as slow.
Okay.
I'm sorry, it's not as fast as NQ.
Okay.
So I've just been looking at that lately.
Perfect. Thank you. Um, welcome, welcome. Thank you. Oh, where are you from? Do you mind sharing?
Oh, I'm from New Jersey.
New Jersey in the house. All right. We got a few other people from that area as well. So welcome, welcome. I know that probably put a smile on Jasenia's face. I see you over there smiling. I can feel it, Jasenia. I can feel it. All right, I'm calling out my ladies I know. All right, let's look at this. Crude oil. So I'm gonna start with a weekly. I'm gonna do a top-down analysis from how I do it, and we'll kind of go from there. Um, if that's okay with you. So looking at the weekly, I like this rounding up that it's doing. That's great. Um, of course, it's pullback right now. As this expected, it did just reach the top here. So I'm just gonna put some lines from the weekly. I don't see many uh fair value gaps based on how this ticker is moving. So what I can see here is this is weekly. Let me put a solid line. And then what I do see, the one fair value gap with Wix in it that I do see is all the way back up here. That's a struggle bus. I definitely know that's going to be an interesting way up due to the fact that we first have to break past 93.03 with this wick here before we can even consider that. But we can mark it so you know that it's there and label it accordingly, as like a weekly fair value gap, whatever. Uh, and what I do when they're up, like the way I look at the open and the close, this is the way I label them. However you want, it's trader's choice. But for my chart, it's open because it's like it's going into it. So it's like open, the opening into it is from the bottom if it's a resistance type of fair value gap. And obviously it's the inverse if um the fair value gap is on the bottom. So I would label that top line going into it, price was falling into it as the open. Hopefully that makes sense to everybody. Okay. So price is coming up. So let's come down. I need another fair value gap. Let's see. We have this tiny one here of that can be tiny support on the weekly. And so that's cool. But I'm just mark that as like a weekly fair value gap, like just support like line almost since that it's so small. But I do see it there. So I just want to come down to the daily and now look at my trading range and figure out what we're doing. So the thing about the daily is it ran all the way up and wicked all the way through this fair value gap. When price wicks through a fair value gap, what I like to call it, and because you're a nurse, this works perfectly for my clinical professionals. I call it an exit wound. All right, this one, the fair value gap has an exit wound, and when it has an exit wound, it's kind of harder to right? Like you got to worry about the back and the front, right? So saving that patient is more critical, right? So in this case, if you kind of put that mindset to it, it's like, that fair value gap is dead. It's just gonna, it has an exit wound, it's just gonna come through.
Mhm.
I know my analogies are crazy, but hey, it makes sense, right?
Right, right.
So I noticed that, and in this case, because we have strikes through on both sides, like an exit wound from the bottom fair value gap and the top, it's like holy crap, it may actually just get stuck here for a little bit and may chop for a while, which we know price action can do. So I will come down to let me still mark these fair value gaps because if the oil is trying to come back up, which we'll see how this Israel and Iran do when it comes to this one. Um, we'll see how it may want to further push back up through here with like a solid candle instead of just the wick because it is just on the upside. Now we have this gap that's not completely filled down here. And because this rejection from the top is so strong, I do believe it may want to put a solid candle body through this gap. I'm pretty convinced that price prefers solid candle bodies through gaps. So if you mark the gap open and the gap close, right? You're 80, 81 to 80. So if you were to say So this is futures. So are you trading? I don't know if are you trading with futures options by chance?
No, I'm still
Okay.
paper trading, so.
Okay. Sounds good. So, um, so I would just make, if you were to get in here, I was thinking of options contract. That's what I want to ask. But if you were to get in here just with the contract itself, like a stock, and run it down, you can would get in now and trade it to 80. And I would say the close of this would be your first target. Of course, it really needs to come past this prior wick as well. So let's drop down to the 2 hour and see how it looks. So the 2 hour, I'm always about dissecting things. Okay, it's a science nerd of me coming out. I'm coming down, I'm coming in the past here, and I'm looking at this fair value gap. Now, I don't know what you're using the chart, but if you're using Trading View, the indicator is FVG, not fair value. There's like hundreds of fair value gap indicators, y'all. When you come to the indicator menu tool, I have favored all these over time. Just ignore these. I don't use them. But when you search, if you put in like fair value gap, you're gonna get like all this stuff. The one that I use is just is the FVG nephew Sam one. Okay. So this one I zoom in really tight because I want to see if we get an exit wound. When price likes to meet through it, it can kind of mean the same thing, almost like an exit wound, like it was really leaving it for a while, which it did. It left it for a very long time, as you can see, before it's trying to even come back for that one. Do we have any lower ones? I love my 2 hour time frame. Anything I can find on a 2 hour, as far as like candlesticks left in a fair value gap, I'm gonna trust that time frame the most for like a day trade, for like and when I say day trade, that day trade can mean like most of the day, y'all, like the whole day, damn near. It can sometimes tip over a few hours. Now, see how the top here had the candles? See, okay, here's a perfect example. Look, you see how right here what day is this? This is April 16th, Tuesday at 10 a.m. It left a wick, right? Then it made a little order block and then it left it and it kept coming down, 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 down. But that was your signal that price was going to come back up. And it sure as hell did. If you would have marked this fair value gap on the 2 hour and you put your little small lines in here, right? And you would have marked this as a 2 hour fair value gap close, that would have been your target. You would just set profit, take a profit order right there and get out. And you would have got in down here. I don't know if you would be able to cut that run up. That was a crazy run up. But if once you start to read the candlesticks and study them more, this would have been enough to let you know to get in at some point within this area. I like to try to get in when I see the pattern forming right before the breakout, and then get in on the breakout if I can, and ride price up. Now, because this is doing a weird like W pattern, I feel like because they have a tweezer bottom, these two candles, the tweezer bottom is a candlestick pattern. So these two candles, the bottoms are flat as a tweezer bottom. This second, these are almost flat. So I'll call it one for now, a tweezer bottom. What it's doing is it's causing a bottom and a bottom, a double bottom, or what we could potentially may recognize as a W. If this makes a W, we'll draw. I draw on my chart a lot. Should continue up from here like that. All right. Then you can have a trade to run back up to retest this high before it comes down. But you need to pay a close attention to these fair value gaps because it's a tweezer top, it doesn't have to go all the way up, especially if it wants to come down for the lower gap. So you want to acknowledge everything so you can have the big picture. Okay, so you're going to tell yourself, all right, I got two smaller fair value gaps on the 2 hour that I can get some money in based on the risk to reward. All right, and how much it is, the $1.40. Okay, so say I scalped it up $1.40, close this fair value gap. That's a perfect trade. If you just want to get in the habit of trying to figure out how to get these fair value gaps, it's one way to do it. It may not be a lot of money because I haven't traded this one specifically to see how the return works and the leverage. But well, I know $1 is usually not like a lot. It's usually for me not the best ones, but I really got to play with this ticker. So we will come up here, you would take your profit there at 83.59 and be done. That's what it looks like it's trying to take out right now, right? And then if it were to continue up, you would be reading these candlestick patterns to say, am I getting candlestick pattern after candlestick patterns, every 2 to 3 candlestick patterns continuing a bullish pattern of some sort? That means it's taking price further up and I can stay in that trade. I would get out first and then recognize if I can get back in or leave a runner to ride it back up. Because we have the gap, I believe that we most likely can run up here, then come back down. And depending on how aggressive that formation is, this will fail and it'll continue down here. This price can fail at the W, meaning that it will make the W and then not do the continuation breakout of a long-term bullish pattern of W and fail at the neckline. All right. Remember all these words, fail at the neckline, and then price will come back down to fill the gap. So sometimes it has to like run up enough to collect enough sellers in order to continue with seller pressure. Or sometimes there's a connect enough, come down and connect enough buyers to continue running up on an upward trend. Right. So that's what retracement is. So for this, I like the fact that we have this here. This looks great. It's just a matter of now, how you want to trade a W. To me, my 2 cents is I was wait a little bit, just a little bit, but I'm not as familiar with it as you may be. So if you know how it moves and you like it, of course you don't learn anything unless you push a button. So you have to push a button in some way to figure out paper trading, and that's the perfect way to start. To learn how you want to execute the strategy. So this is what I got for this. It's just a small run up, a potential rundown. That's all I got right now for the patterns. All right.
Thank you.
You're welcome. Any other tickers you guys want to prioritize? Of course, I'll keep looking at the chat for anything, and I'm gonna keep going. All right. Whatever tickers you would like. All right, it's 10:05. Before I do that, I'm gonna check back on my own stuff because I do teach and trade on here. For those of you who are subscribed to me know that I am over here pushing a button. I am not like some of these other traders that show you a bunch of live stuff, but then don't actually push a button in front of your face. So I would love to push a button in front of your face. I have a trade to execute. So right now it's stalling. I mean, Price did a lot of running. It's tired. You gotta take a break, gotta breathe. It did like a $60 sprint in both directions right quick. It's just tired. I think it's just tired. I'm gonna see. Let me put an alert. What I'm gonna do is I don't trade with stop losses, you guys. You're like, oh my God, Randy, you don't trade with stop losses? No, I don't. I don't like the damn things. They stop me out and make me lose when I don't want to lose. What I like to do instead is trade with stop loss alerts, is what I like to call them. I make sure I have alerts on my chart at all times, and then I manually get out. I stick to my discipline most of the time. I'm still human, but most of the time, and I get out of my trades when that alert goes off because I like to see and assess to see if price is just doing something crazy, or and it means it's not going to actually stay there, or price is really trying to reverse on me and I really actually need to get out. So this is why I don't trade with stop losses. So with that said, I do believe the future's just trying to address this, but because it made a V pattern down here, the V is the more aggressive bullish pattern. And it'll come right back up to this order block, which it kind of already has. And it'll do a little bit of a decision. It should continue and finish all the way back up through. So with that being said, because of just the way this fair value gaps looks to me, I can trade this from my previous daily gap close. That's where price, it was actually the open, when price previously gapped open. I can run it back up through here, and that's like another $43 trade. Okay. So that will be a nice little profit. So I'm going to set an alert right here. And if it goes off, then I'll jump in and see if we can get it to run up there. And of course, you guys know I know how to get the hell out of Dodge if I need to, or reverse, but we'll see if we can have some fun with you guys today. All right. So this is my alert for the top side. And if it comes back down at the bottom, hold on before I leave. It come down in the 15-minute. I think it's gonna do the upward thing because it's kind of leaving kids here. And usually right when it plants the kids, like you gotta leave them. Like you're not gonna drop your kids off and then just go back and get them in 5 minutes. Like, right? Like you want them gone. So you gotta leave them damn kids and leave them and then come back later and have your mommy time and get your nails done at Fanciful Nails, right? Y'all know I'm crazy. So and you just, you have your zen. All right. You take your time. All right. Take time with these trades. Get your workout on. I definitely have to keep a workout regime for this. All right, so I'm gonna just put it's so close to it. Let me do it as a 15-minute alert so it won't get triggered as fast. Okay. All right, so I have a top and a bottom, and depending on how it goes, I will enter. That's how I set it up, and let's keep going. All right. All right, all right. We're gonna kind of speed things up along here. So hold on for the ride. I'll keep my eyes on the chat. In this part of the session, what I want you guys to do, I want you guys to drop tickers, all right, in the chat that you want me to look over. If you want me to look over them with you guys, I want you to ask questions at any moment, either by raising your hand, jumping in, like whatever you need to say, at that moment, because I just kind of go through all these tickers. And if you have a question, I want you to address it at that time. Bring back even the questions from the presentation if you have them to help understand what we're looking at. All of that, open floor. Just raise your hand, please, if you want to jump on mic because you don't type fast. That's all I ask. Okay. All right. So let's get to it. All right, I'm gonna start with weekly views of everybody because this is Friday and I'm looking the way my psychology is at the end of the week. I'm planning for my trades for next week and I'm seeing if I'm currently holding any options, I want to know, can I hold them over the weekend or not? It's not always best to hold them over the weekend, but it's not like the worst thing to do. You just need to know when and when not to do it. So if you're a swing trader, all right, you have different personality styles. Here we discover ourselves as a trader, right? So some of you are going to be more prone to holding things, and you're going to need this weekly analysis to help you hold because you're maybe have more patience naturally. You're maybe not as impulsive, right? You have the time to wait. You're what I would call one of my swing traders or investors, right? If you're impulsive like I am and a little risky like I am, then you may be more of a day trader or a scalper, right? And if you're like that, you're most likely not going to hold your trades over the weekend, like not even try it a little bit. You're just going to want to get in and out and chuck the deuces like I do. Peace out, homie. Take my money and run, right? Take it to the bank. I treat it like an ATM machine, but that's all dependent on your personality. All right. It's all dependent on your personality. All right. So weekly on Adobe. Adobe's been coming down with a nice head and shoulders pattern, a nice head and shoulders pattern. Hope you guys have a notepad. So I'm going to spit out some patterns and I want you to make note of these patterns and look them up. They are not just names, and I did not just make them up. Like I really didn't. I know that sounds crazy. Head, shoulders, knees, and toes, but I didn't make it up. It's a real name for a candlestick pattern. I have a question here. Hello, how do you trade futures? I'm currently using Robinhood. Is there another site I should be using to trade futures? Also, can you explain a little bit about what futures are? I can before I get further into it. So for me, I don't use Robinhood. I consider myself more of by definition, yes, I'm a retail trader, but I don't trade like a retail trader and I don't use platforms like a retail trader. I trade more like a professional trader. All right. I use TD Ameritrade to trade everything, futures, Forex, stocks, options. I use TD Ameritrade, soon to be or already is, depending on where your account stands, Charles Schwab, right? TD Ameritrade and Charles Schwab merge, right? So that's what I use. I'm not against any broker. It's your choice, your broker. But that's just what I use because I like to keep it all in one house as I do trade multiple accounts. The other answer to your question, what is futures? Excuse me, really, what is futures? So futures, CME, it's like it's how would the best way I explain it? and keeping it short and sweet. It's the buying and selling of like the combination. Since this is the S&P 500, as we know, the S&P is like the top 500 companies, right? And within the futures, there's trading of words are losing me this morning, guys. The operations that make these businesses run like full time and things like that, oil, the other products that go involved, the trucking industries, all that tie into these businesses is what creates the futures, if that makes sense. It's all of that like behind the scenes of these companies that help the future that is what makes the futures market essentially. So this is why the futures trades more hours, right? So for my nurses, for all of my just everybody who's juggling multiple tasks, which is all of you because you're women, you want to find the best time to trade. And to me, this is why I love the future so much because I am a mother of a young child and I'm homeschooling her, right? I'm doing all these things. I'm running the Traders Crib, I'm homeschooling her. I'm doing, we travel, we have fun, we do all of these different things. And so when is the best time to trade? Me, early morning, like late at night. Like usually the best time for me to catch futures is like actually before 9 o'clock, to be honest with you, and then after 8 p.m. You can get some good moves in between there, of course, during the day. Of course you can. But but you have to be in a position to be able to watch the market. And if your job is like more 9 to 5 hours and you can't really watch the stock market. So if you're trading things like SPY, if you want to be a stock trader and things like that, you want to trade like SPY and Netflix and Adobe and all these other tickers I'm about to go through, you need to have eyes on the market. You need to have something, some type of schedule, some type of flow to where you can put eyes on the market, or you need to maybe adopt a swing trader mentality. You're only doing it sometimes, right? So you can understand the ebbs and flow of the market and manage your trades accordingly. So this is why I like futures, because for one, I can execute at any time of the day. I can get in and out. And when I get in and out, I don't have a day trade against me if I'm trading an account less than $25,000, right? I won't have a PDT rule against me. I can go in and out as much as I want. My cash is pretty much settled immediately, pretty much. The emphasis on it pretty much. There is a settlement time of 3 p.m. Central Time for futures, okay? But for the most part, when you enter and exit that trade, that money that you just profited from is there for you to trade. Okay. So that's the beauty and flexibility of futures and why I like it. The leverage is high and you can trade the micro, which is what I hinted to earlier, but I didn't get to finish speaking on. So the micro futures requires less capital. All right. The mini, you're going to need 20 grand. All right. The micro, you need 2 grand. Say it one more time. The micro, you need 2 grand. Most of us can come up with 2 grand. If you believe in yourself, you can come up with 2 grand. I don't want to hear it. You can come up with 2 grand. I don't want to hear it. If you pay a rent, you can come up with 2 grand. All right. So most brokers require a 2 grand minimum for futures. All right. Once you have your account approved for futures, you can trade the micro futures. I trade the micro all the time for smaller accounts. In and out, same thing. The leverage is not as high, but you could definitely, I've made $400 on one futures contract micro. But that's because I'm good at holding, like I can hold like I can get $60 moves out of futures. Just studied over time. But when I started out, it's more like, and even still to this day, I have trades worth more like $50, $100, $200, right? It's just sometimes you catch the runs and it's like a $400 day, yay, right? So there's definitely some good leverage in there, definitely some nice grades, definitely an easy way to build your account up $50 at a time. I love the futures. So hopefully that can explain, give you guys at least some facts about it and help you guys want to trade it. Come on over to the dark side of futures with me. You have support over here. All right. And some of us here in the crib, I focus on S&P 500, but I do see some familiar faces that I haven't seen in a while that I know trade the NASDAQ And the Dow futures, you could trade it all. And then of course, Aisha came in here and spoke about how she trades crude oil futures, which is great. Like there's tons of different things you could trade with futures, more than just the NASDAQ, the S&P, the Dow, crude oil. There's a few other tickers. I just don't know them all. But of course, you can research them and figure out exactly which ones you like, bring them to the crib, and we'll talk about them and we'll all grow together. Because if it's a good ass trade, I'm gonna get in on it with you. Okay. All right. All right, all right, all right. Any other good question? That was a great one. That was a great one. Keep it coming, y'all. Keep it coming. Seriously, keep it coming.
Thank you.
You're welcome. All right. Let me give me 1 second here. All right. Next, let's keep going. All right, so what was I on? Adobe, playing around with Adobe. All right. So from the weekly analysis, Adobe is coming down, down, down towards this gap. So I have this purple line here. So this gap, it's a weekly gap open, right? So that shows that when price comes to the gap, now gaps, just trader tip, pro trader tip, gaps act like a support level. So usually when price is trying to enter into a gap for the first time, you'll get a bounce. First time, meaning that this is the first time since price has created this gap that price has come back down and tried to touch it with a candlestick. That's what I mean. All right. And this is the first time, so it probably bounces weekly. So we come down to the daily. We already see the daily candles are exhausting as it approaches the gap. Exhaustion candles are when things are kind of like fizzling out, like price is still going towards a trend, but the candles are getting smaller and smaller. Exhaustion versus like the long candles where it's running. All right. So I don't really love the way Adobe looks as far as the trade. I'm waiting on like whatever long-term pattern is going to give me for this fat gap back at the top. And I will swing trade that gap in due time. But right now, I'll let Adobe continue to drop. As I go back in time and look at previous data, it has a small gap, it has another gap below it, then an order block, and then more fair value gaps and liquidity if it wants to fall that far. It left a lot of liquidity down here to come back for, and it seems like it's finally doing that due to all of, everything happening on in the world. It's aligned up perfectly. So if we look at the weekly, you see how it's coming down for all of this liquidity. Moving over to NVIDIA, a fan favorite. Who doesn't love NVIDIA? NVIDIA moves for you, okay? NVIDIA has an ATR. ATR is probably the only indicator to leave down here just because I like to know how much money it moves per day. I like fast ones. I don't like slow ones. That's me. I'm impulsive. I'm a day trader. I make my money and get out. All right. And some like slower tickers. It's totally fine. But NVIDIA moves at an average down here, as you can see, $33 a day. So all I need is like 10 of it. I don't need the whole thing. This is why I like things that have a large ATR, average true range, large ATR or average true range, an average true range of 7 or above. You don't have to come in and get all of that 7. You could just try to get 3 or 4 of it and call it a day of that move, right? Because if on average it moves $7 a day, then on average it's going to move at least $3. So you can just get to 3, make your money and get out. That's part of the trading psychology for your trading plan, right? So with things like NVIDIA, when they move like $30 a day, take 5, take 2, take 10, take what you build a strategy and take, okay? And just use my tips of fair value gaps and order blocks to help you refine that strategy, okay? So as I drop down to the 2-hour on NVIDIA is like pressing into this area. Let me come back out to the daily. It has this, it filled the gap here. So it came down and filled the gap at 823. And then now it has this long, what I like to call bacon candle. The bacon, because everybody likes to eat bacon, even though I'm vegan, so I don't really support that. But it's just the way we use the terminology here. We can come down into this candle and into all of this liquidity, another gap, another order block. All of this is right here. And we have a lot of cloud coverage right here. This is technically a larger chart pattern called a descending scallop. a descending scallop. Okay. This type of pattern is a reversal to the bearish side. Price, if this pattern is to sustain, price will fall further. If price were to fail, price is going to test off of this gap and then slowly turn back around and come up and just create a larger area of consolidation and break it back out to the upside. So right here, we really are paying attention to just how much further we want to drop. All right, I'm just keeping these kind of like daily analysis. I already have some lines charted in places, as you guys can see. So I'm just overviewing what we're looking at and seeing if I can find any other potential little trades. I don't think anything else is right. Everything just fell, so and kind of hit at the bottom. So we're kind of just waiting. All right. Looking at AMD, which trades similarly sometimes when it feels like it. Emphasis on sometimes when it feels like it. AMD sometimes when it feels like it trades similarly to NVIDIA because they're both semiconductors. As you can see from the chart, if I go to the weekly, AMD looks like this and NVIDIA looks like this. So similarly different, right? AMD has really that head and shoulders. Like this is the head, these are the shoulders, literally head, shoulders. Do y'all see that? Do I need to bring out my handy dandy drawing tool here? Where's my, oh, here. No. Where's my paintbrush? Here it is. Let me hit over there. There we go. All right. So this would be the head. And then we have, y'all know me, I'm funny. Oh, look at that, head, shoulders. All right, that's what we're looking at. Like seriously, okay. So yeah, let's see if I can delete this off the chart. But that is a reversal pattern. This is why you want to zoom out and get the bigger bird's eye view of what's happening, because that will help you hold, like from the weekly, if you saw that coming and you were like, oh, I want to buy a put like a couple months out on AMD, but all this stagnation, do I hold it? Do I hold it? The weekly time frame with the way this fell will help give you that conviction. Okay, I can hold through. Price is just bouncing around. Price is really trying to come for this lower target at the bottom here, this lower level of liquidity, because it's coming to this fair value gap that it left a few kids in. I keep talking about these kids now. I left in fair value gap daycare now. Most of y'all got kids now. It should stick. So like, just saying, it works most of the time. And then here's another kid. Oh, I guess we got to come further. Now, when there's no kids, you're gonna wait. That doesn't, you see the liquidity, but it's like it's not 100% gonna come down unless you have a reversal candlestick pattern that's coming down. Right? I just want to emphasize that. But when you have kids left, you're more thinking, it's a matter of time of when you coming down. I'm just waiting. All right, I'm gonna ride you up, but you coming back down. I know you coming back down. And when you see the signal, and in this case, this pin on the weekly would have been your signal. It's time to short and come down. So that's AMD for you guys, okay? AMD. Disney, I've been trying to get back into Disney. Disney been falling with this pullback, but of course I knew it could come back and deal with this. Of course, it has a bit of kids itself. Now, in this case, I want to point out this one doesn't really have kids the same way. This is what I call kids with chaperones. Okay. And sometimes when kids have chaperones, it can take even longer to come back, right? Because they got chaperones. So the chaperones are when the candle body is in with the wick, when there's like more of a candle, not just a wick in there, but more of like the candle left in the fair value gap. All right. So it's like they're not at daycare, they're more like what do I say? Like on a field trip. so we can come back and get these, but what we could potentially happen here is we could potentially not feel this lower fair value gap. Potentially, it depends on how it forms. If we do like a head and shoulders, another bearish pattern, then we could come down and feel this fair value gap, and I have no problem. But because how it left support in here, candles, the rejection in here, it could stutter, beat against it, beat down, press down. An example of that would be something like it doesn't have an actual block on this. I'm trying to go back in time and find it on Disney. Where price kind of like was beating up, pressing up against a certain area, but didn't fall. It kind of did it even right here before it broke out. It like pressed into it, but then it broke to the top side. So we'll see if it presses and makes more of a bearish formation and continues down, or if it bounces, ricochets. Like, I don't know how it wants to do. And it, of course, it's going to align with something with Disney, some news that's going to be like, all right, we're going down, we're going up, but you know what the potential is, and you know that the greater liquidity is down. All right. Now we do have some liquidity back at the top that it needs to finish, which is what I was waiting on. So we have this wick that was left further up in this weekly fair value gap, and that's what I'm waiting on. So I was letting price come back down, do its thing, and then once it hit the bottom, I was gonna come in and ride a sucker all the way back up, because then I know it's coming for the rest of this fair value gap up here to the top side, because this is a very, 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 if I come zoom out even more from the weekly and take a bird's eye view of the candlestick pattern, you see how this is a very large cradle, and price is trying to come back up. Disney is trying to do some recovery after DeSantis here in Florida done picked on it and made fun of the poor Disney. I mean, I just like my Disney songs. I'll just be biased with that. Okay. I'm not like, I know Disney can be on some other stuff. I just think all their songs are catchy. Like all of them. So I do believe that Disney, I saw in the headlines, you know, about Disney doing some revamps with their theme park and things like that. So that should help bring the stock back around. All right. Target, when it comes to stocks, I usually am swinging them a little bit, because the companies can just take their time to move. I mean, time, y'all. So Target in this weekly, I see I have all these things already labeled weekly wicks here, because I know price has to break this wick. But again, we have a large fair value gap up at the top here. Price was trying to come for a wick, try it again, came lower, try it again, equal, and then broke down. Something happened with Target. It just couldn't make it happen at the time. So it fizzled out, it broke down, it came all the way down, and now it's coming back up in a very, very strong way. It's meeting the neckline here, meaning where it previously broke out of. Ran into that order block, right? Large magnet, very large magnet. So price had to be pulled. The larger the magnet, the greater the pull. Okay, the larger the magnet, the greater the pull. Just makes sense. I'm really keeping it like elementary physics here, y'all. Elementary physics. All right. So, as we consolidate here at the neckline, I would assume we want to continue up, because we have liquidity up at the top to finish. So Target was one that I was going to, y'all know I mean Target. I was going to enter after it broke 183. So I have an alert on this line. And when it broke 183, that's still enough risk to reward for me to take it all the way up to the weekly fair value gap close. Because it's weekly, I was going to buy at least 2 months of time on a contract to see how high I can get it to come through here. I do recognize that when I came to the daily on Target and I went back in time, that this area of run up that I was looking at from the weekly is in fact a gap, a very large gap. In fact, a very, very large gap. Well, the thing about gaps, especially gaps like this is what I call a gap. You see this gap further back in February. Here's a gap. And then it gapped again in May of 2022. So it gapped in March, February 2022, then again sometime in May 2022, and then left a gap on gap situation. So this is where I'll break my song, gaps on gaps on gaps. We got gaps on gaps on gaps and gaps on gaps on gaps. Okay, that's what we got. And when we have gaps on gaps, we have to be mindful of that. We have to mark that. And we have to come in here and say, okay, well, this gap, the one further back, right, had an opening here. When price comes back for it, it's going to get stopped out at this first gap opening before entering and finishing it out. It's just something I've consistently noticed and recognized, that when you got a gap on gap on gap, gap on gap on gap, you're going to have to recognize that it's going to create a wall of resistance for you within it as it tries to come up. It already did it. Look right here. So it did it the first time, because this gap is so big. When it came back up, it hit the first wall because of right here. The first little wick down from the previous data within that gap always stops out price first. It came up, look, it hit its head, boom, right there. Then came back down. Tried its might as it will. It could not get the strength to try back for that line. So it kept having to collect more and more buyers. Then it was like, the hell with this shit. We got to really get some buyers. And it really now it's trying to come back again for another attempt to break through this level. So you better believe when it breaks it, it's going to get stopped out at 199 because of the next space or like candlestick pattern that's kind of in the way within the gap. All right. So just note these things. They happen like clockwork every time. Find as many charts as you want to practice that on. I promise you it's there. All right. I promise you it's there. And the same situation will happen when you're falling into gaps, right? It's the same thing. So if you're coming down and you have a gap on gap situation, recognize the first gap where candlesticks are within that gap as a level of support that price is going to bounce off of before trying to take the whole gap in one sweep. I'm telling you, because if you do it in one sweep, just warning, fair warning, just fair warning. I didn't put my disclaimers out this morning. I am not giving financial advice, and you trade at your own risk, right? So, like, just telling you. All right, my disclaimers are all over my website. So for SOXL, right, and I love SOXL too. I wanted to come back up as well with doing the whole thing down, which at this point I told myself if it entered this fair value gap, I was going to ride it in puts. So I think that's what I'm about to do, because I wanted to see how we were going to consolidate here. So this is the weekly we broke down. I've been trading ES all week, so I wasn't paying too close attention to SOXL as it came through here. And I actually thought that this gap close at 36.10, this green line was going to hold price up. But of course, we have issues, political conflict going on. So of course, that's going to break all of that. And we're coming down. So SOXL is a semiconductor ETF. Okay, it holds like a lot of them. And it's very, very cheap. As you can see, it's $33. It's very, very inexpensive also to trade with options. So you can trade it as a stock. You can buy a bunch of shares at $33 a share. It's fairly affordable. And then you can trade it with options contract. The option contracts are fairly affordable as well. So I'm bringing out these tickers that are also, we started a little high, Amazon, Adobe, hundreds of dollars, right? Target, getting a little cheaper with Disney and Target, and then XOXL coming even cheaper, right? It's something that you can afford for those of you starting to trade with small accounts, right? I have built up an account with under $500, but you have to do it with stocks and options and a cash account. You have to do it with stocks, options, and a cash account. You cannot have margin on that account. All right. If you're going to trade options, you cannot have options and margin approval on that account for under $500. If you're trading with any of the big time US brokers like TD Ameritrade, TradeStation, that stuff. All right. Okay. So I love the way SOXL is coming down into this fair value gap. I think you'll close it out at the bottom here, which would be nice. So I'm just going to move this line down. So that's 29, 33, 29. So because it's Friday, I think I'm going to enter this on Monday just so theta won't affect me over the weekend. So theta is time decay. Theta eats at you every day, including weekends. Theta deducts money from your contract and your profit just from the day, even over the weekends. It's just the way options work. For those of you who are still maybe new to options, don't understand them, and have yet to take my course on them, I go deeper into it, but just know that. So you want to be patient when taking your options contracts and make sure you take them at the right time. You don't hold them for too long. So if price just runs through here and I miss it today. But I think Monday will do me justice and I can finish holding it down through there. All right. So that's how I feel about SOXL. We keep going down my watch list. We transfer into a few other types of tickers. We have silver and gold next. Again, a few precious metals to hold long term. Yes, we are traders. We are day traders, but why wouldn't we be diversifying our portfolios for long-term investment gains, capital gains, like all of these things? Like, why wouldn't we be doing that? Why wouldn't we be also building our own retirement account with different asset classes. Why wouldn't we be doing that? Right? That's what we want to be doing. We want to be adding other things to diversify that portfolio. That's our, especially if you're on an entrepreneur journey like myself, that's your 401k. Okay, you got to do it yourself in so many ways. Or you can hire somebody like me or through your bank, whatever. But yeah, that's another story. All right. So for now, I like silver. I like the way it's been moving up. It's moving up for a while. Of course, it's a metal. We want to have metals. Metals make the world go round. We can't do anything that we do without our precious metals. So right now, silver is looking like it's making a flag pattern here. And it looked like it could continue breaking out to the upside. We do have some gaps below. I had charted this up pretty heavily with gaps and bodies and things like that. But it's one of those that you're probably going to just hold long term more than anything. You're just going to buy and hold. And if you're going to do any type of options trading on it, it will be things that you are buying and holding. Let me just put it like this. Anything that you have more of a long-term investment mindset on, and you're just going to buy a bunch of shares and hold it. The way to day trade some options with it is through covered calls. You can look up that word. Covered calls is a strategy. Of course, I go over it in my course. But it's a strategy that you can use while you're holding shares to also profit from options at the same time as collateral, it's by using your shares as collateral. All right. Silver, $45 a share, looks very similar to gold as they're both compressing up as far as just the candlestick formations. It's just, I'm not really looking for an actual day trade in between there. All right. Okay. From there, do you guys have any other tickers? I do have a whole nother watch list with way more other fan favorite things to look at if you want to. It's up to you guys. Here goes, yes, my alert went off to come to downside. So there it is. Pulling back down because SPY needs to finish its gap. So I'm not really surprised. Side by side view. Okay, RDDT. We can do that one. So SPY finishes gap perfectly, which is what I expected to do. 497 is doing it beautifully. And I actually do expect ES to kind of stay more on the downside. I'm not, because it left, like, again, so many kids in here. When it does it too many times, it can take a little longer. So I'm not expecting it to just run up and knock out this very gap like that fast. I'm just not. All right. RDDT. So Reddit, it's fairly inexpensive. I never thought to look at Reddit. I always see it too, like in news things. I just never looked at it. So thank you. Thank you. Thank you. Is it LaShelby? I'm saying that right? Hopefully I am.
You did.
Yay. Nice to meet you. Welcome to the crib. So since you can talk, if you don't mind sharing why Reddit, like who you are, where you're from, why Reddit, your trading experience, what are we looking at? And welcome.
Hey, yes, my name is LaShelby. I also go by Shelby. I'm from Texas. And I'm looking at Reddit because they just came on the market. They just got out there, and I invested heavily in them, and I am kicking myself right now because I got in when it was like really, really popping, and now I've lost quite a bit of money. So I'm trying to figure out how I can gain it all back and then some.
Okay. So over leveraging is a thing. We're gonna work on that with psychology. This is a risky one because it is so new and there's not a lot of data. So there's more than one way you can make your money back. So one thing I like to tell traders is that, as much as you want to make it back on the ticker that you're in, you don't have to, right? If you have capital within the account, you can always use something else that's doing better to make your money back up to hedge against your losses. So then you can just cut your losses out of this trade.
Yeah.
Okay. So that's one psychology I kind of want you to get, comfortable with. As we move, as it looks like it's trying to come back up, it's not doing it in a way that is very trustworthy at the moment. To me, based on the candles, it's just not. And I have this nice little, yeah, okay, great. It's coming for this little gap here. That's exciting. But I have this underlying feeling that's not enough for you to fully recover. So,
And I just bought it as a stock. Like I wasn't doing options or
that's
futures.
great. That's amazing. I'm so glad to hear
Yeah.
that. That's news to my ears. All right. We all know trading at your own risk, but I am going to try to advise from my perspective the best way I can. Okay. So
Okay.
just whatever you do is on your own. I am not liable for anything after this point for how you manage this trade. It's just from what I see. All right. So for Reddit, I would love for it to come back up through this gap here, but this is going to be you're going to have to pay attention to fundamentals here. This DJD, Trump influences this crap. Oh Lord. See, I ain't got, social shutdowns and mid giant. So you bought it to go up. You bought shares. You do know you can short instead of buy, right?
What is that?
So I'm not sure if you're in a cash account. And of course, if we want to have a one-on-one, you can schedule one-on-one and I can talk more personally. I won't do that on this call. But what you can do is short shares. So in a margin account, when you open up a trade account with your broker, they'll always ask you if you want to open it with margin. It just gives it what it does is the broker is giving you some like backup money, right? So when your trades are going kind of up and down, you don't bleed into a deficit into your account, right? So what you can with that margin or with that protection there from the broker, it allows shorting of shares. This term called shorting of shares, which means that instead of you buying the shares like you are right now, hoping price to go up, you sell the shares and profit on them going down. So you would sell high and buy low. Does that make
Okay.
sense? So you can reverse. So if this is in fact a margin account, another option you could do is just reverse your position. You could take the loss where you're at, and then maybe not with this ticker because there's so little data, and I can't give you a good target, and that's why I don't really like for this. I'm actually more like hold where you're at, find something else to hedge against while this recovers because it's so new to the market. It's so new, right? And let it give it its chance, and then if it goes below a risk tolerance that you have, you're like, okay, if I'm down over $200. I don't want to be down more than $200. I'm just cut my losses, right? You can cut your losses. And then say if Reddit is doing badly, you can short it down. Because it's so new, it's very risky because you don't have any levels to go off of. You do have, of course, it can recover and come all the way back up to the top. Of course, it can do that. Of course, it probably wants to do that. And I would hold to see if it can. Set your alerts at like this entry of this fair value gap at 49 and see if it recovers back up to 49 and kind of feel good about that. As far as recovery goes, yeah. So it's something that you could short Apple, because Apple getting on my damn nerves. Um, Apple just been around longer, right? So companies, when we're in times like this, where the market's just taking an overall plummet, you're either buying puts. I don't advise selling options contracts. It's just another risk level. And I think it's something for like literally hundreds of $1,000s accounts or more. Like that's what your capital needs to be. If you're trading with only tens of thousands, right? Even if it's 50, it's in the tens of thousands. Okay. I want you to more buy puts, and you can sell stocks, just the stocks, because that's less risky, but I don't want you to sell options. All right. Without full understanding and a lot of experience. So you can short Apple. Apple has a lot of data to where Apple been around for a while. Apple has all this candlesticks that can come back down to back into 2017 and all of this stuff because Apple's just been here for a while. So because of this, Apple's pretty, I mean, it's 165 a share, but when it comes to options, it's just putting things out there. I know I trade options more. You can buy like an options contract with Apple regularly cheap coming down. But my whole perspective that I'm trying to relay is you want to short a company that has data that you can rely on the at the bottom, like its price is coming down. That's all I'm really trying to get at. So let me see. Do I have another one that's maybe a little more inexpensive? A real life example that's under $100 that we can short down. It's been around. I mean, obviously SOXL because it's like 33, but you can buy these ETFs as shares too. Like you can use, so let's go back. Because that one's actually not bad. And it moves slow enough so you can manage it too without you like freaking out all crazy. So let's go back to SOXL. It's $33 a share. It's perfect. Boom, $30 a share. You can short it. So that means you can go in and you can sell it. So you would open to sell is what you're going to do. Right. So you're going to open the sell or you're going to hit the short button. The sell, whatever on SOXL. And you'll enter that way. And as price comes down, you'll see your P&L go up and up and up, right? And you can take it down to, as it comes to the fair value gap, the trade that I was going to do will be $29. So you can, in the meantime, if you want to take a test and try, you can also try paper trading because I don't recommend jumping into a live trade on a ticker you never traded before right away. I always suggest taking a few practice swings and paper account of some sort and then get in live. All right. So, but this is a trade I know I could do as it's bouncing at this order block here to come down into the fair value gap. I can trade down to the fair value gap. So you can short down to the fair value gap to practice shorting. And you can see how that works. And that will help you manage anything that you do. You need to know how to come down as well as up. So I know I beat the dead horse on that just a little bit, but I'm trying to make sure it's clear. And I would encourage you to practice that in Sims so you can see how it looks. And that would be my advice on trying to get your money back. I would leave Reddit alone and look for something else. XOXL is a good one. A few others on my other watch lists that are relatively inexpensive that the ladies in the crib have helped. We built this list together, guys, over time. And with new members, it will just keep growing. Gush is an ETF. Okay, it's S&P oil and gas. You could do the same thing here. It's under $100. All right, I'm pulling out Walmart. Walmart did it split. So Walmart's under $100 and Walmart's been around for a while. So you have some things to play around with and figure out and chart and gaps and just got all of that. Viking's is pharmaceutical therapeutic company that's been in the news a lot lately. It has this long gap at the bottom. Right now, I've been advising just hold off on trading it because it's just in an interesting spot with the candlesticks. But overall, it's a stock that has it fits the price range for under $100. Is what I'm getting at. All right. Fits the bill for under $100, and the ATR is not bad. $3 ATR is really not bad. It's like average. All right. Of course, you can trade inverses to things like SQ. You got QQQ and SQQQ ETF, things like that you can trade as well that are inexpensive. It's $12. Shopify, $71. Okay. I have quite a few things under $100 here to get you guys started. Quite a few tickers. All right. Starbucks finally coming back up in a nice looking way, actually. I wasn't too sure if Starbucks was going to try to make this recovery or not. And I don't know how long this little run up is going to last, to be honest with you. It doesn't look very trustworthy at the moment. but it's another company that as things are falling down, you have a level to trade to as a whole market's taking a plump and hedge against any other positions you have. All right, Copart's another one, $53. I'm just trying to give you all the tickers I can give. I don't like Baba, okay? It was a fan favorite a while ago, but I don't really like it. It's just my 2 cents. I'm entitled to have my opinion. All right, any other tickers you guys want today? You see, I have quite a list here, but I know I'm going into some deep explanations, so I'm gonna take my
Thank
time.
you.
You're welcome. You're welcome. Of course, of course. All right. You guys are pretty good on that. Any others? My ladies at? All right. All right, all right. So from here, let me see, what else do I want? Anybody? I went over pretty much everybody here. So from there, I'll just sneak peek. I would recommend you guys staying to the end of the call, especially for new members here. For people who maybe want to consider joining, things like that. I do have an offer for you at the end of this call. But I do want to, a few of us experienced traders here do trade different asset classes, and that is my overall personal trading goal. It's why the trader crib exists as well. I am not here just to trade futures or just to trade stocks or anything like that. I want to diversify myself. And I believe that when one market is not doing as well, another one is. So a lot of times when the stock market over here in the United States looks like trash, the Forex and the currency pairs are making moves. Case in point, USD JPY has been running like crazy the past couple of days. This is a weekly view. For the past couple of days, it's been doing quite well and looking to prepare for the next breakout, which I am just waiting to press the button to get back in on. I took USD JPY all the way up through here as it came back for this large order block. Um, a lot of the candlesticks and in these methodologies that I'm telling you guys about, reading the candlestick patterns, recognizing where wicks are being left in certain areas of the chart. This is all also from the Forex side. Again, it's Japanese. It all relates. It's all the same. The principles that I use apply across all of the asset classes. So why wouldn't I trade them all? Kind of like, y'all know I was a 90s kid, so there's a bit of Pokemon action. Gotta catch them all, gotta catch them all. I gotta catch them all the trades, okay? I gotta catch all the asset classes. I gotta catch them all. I know I'm corny, y'all, but leave me be. Leave me alone. Leave me alone. Just love me for who I am, all right? So here we are with USDJPY, and I see we left kids here, but I know we have to get like a true like head and shoulders reversal before we come back down to this level. Oh, and I can't wait to short it. And again, you can short Forex. Okay, you can short Forex as well. So I take it up, I buy to go up, I take it down. Forex has a similar schedule to futures where it trades around the clock, meaning that futures and Forex both start the week on Sundays at 6 p.m. Okay. And then they end Eastern Standard Time because I'm on the East Coast here. So Eastern Standard Time. And then they close Friday at 5 p.m. All right. Eastern Standard Time. All right. And the only day that no markets are open is Saturday, which, if you are spiritual, you need a Sabbath day anyway. So Saturday is a Sabbath. And the markets seem to agree with that notion as well. I'm just saying. So gotta love it. So this is what, as far as other times to trade, people who have other jobs, you're trying to figure out what else to trade. Forex is nice too. Forex moves a little bit slower and sometimes. So you will hold these positions a little longer because you got to remember it's a currency pair. It moves very different, but it does in fact move. And it is in fact lucrative. You don't have, again, pattern day trader rule or all these limitations to being in a stockbroker account. You go in and out as you please. Of course, you can trade Forex with a stockbroker who supports it, TD Ameritrade and Charles Schwab. Charles Schwab is actually the one that is the Forex and futures like supplier to TD Ameritrade. And so that's why they're merging. But yeah, you can trade it all in one broker. And that's what I try to do to keep it simple. But here we are. I love it. That's just my little 2 cents on Forex. Now, the other currency pairs, I pretty much stick to JPY. I don't love anything associated with the euro as much. It just doesn't, I don't like the way the chart feels. It's just my feminine intuition, the way I feel about it. Y'all don't have to take that same notion at all. Y'all can come in here and tell me, Randy, I don't agree with you. I love it. And I'm going to come in here and I'm going to talk about it and I'm going to trade it. And I want you to, because I want that back and forth. I want other people to feel like, they can do what they need to do for them. It's empowerment here, ladies. Like, if it works for you, it works for you. Who am I to tell you you're wrong? That's not what this is about. That's not what this is about. If it works for you, you like it, I love it. All right. Because overall, as you go through trade, I went through all these tickers today. We went through futures, Forex, the stocks, all of these things. No matter what in your trading plan, you have to narrow it down to no more than 2 to 3 tickers. I do no more than 2 to 3 across each asset class. And it's really like ES and SPY over here on the stock market. Sometimes Apple Apple and XOXL when it feels right. And sometimes I'll look at a few of these. If it feels right, I'll take a company options trade, right? But my main 2, SPY and ES, and then USD JPY, and that's pretty much it. That's like my 3. Like that's three already, and that already hits multiple asset classes. That's 1 futures, SPY stocks, 1 Forex. It's 3. You can't look at everything. You just can't. So and you have to find the consistency and figure out what you like. So you can hop around and try to follow all the news runs. You're going to be all over the place. You're going to be blowing accounts like crazy. Find 3 that you like, trade them up and down. Because once you learn how to trade them up and down, why do you need to trade all these other ones? Just trade that one, trade it when it go up and trade it when it go down. You make money no matter which way it goes. That's the beauty of this game. You don't need it to go up to make money. You just need to know what you're doing. That's it. So I really, I'm touching different asset classes without overwhelming myself. And that is the biggest thing that you guys got to do in your trading plan. I recommend you get a trading journal. I recommend you write. Recommend you write out your feelings and things like that. I recommend you do all of that. I keep a journal. Starts at a small notebook, right? I don't have, you could do an Excel sheet for like keeping just track of your trades, P&L, tax purposes, things like that. Okay, yay. But you need a space to write out your emotions on these trades. You need a space to write out your plan and how you're analyzing the market, and write those steps out so you can make sure you have a clear head when you go to execute and press the button. Okay. These are pro trader tips that are going to help you stay consistent on your trading journey. All right. These are all things that I believe are required to help you stay on your journey. So it's 11 o'clock, which I usually, trade for the first 2 hours of the market. Pretty much that wraps it for today.